Hello traders and welcome to our 7 steps for strategy construction video series. Today is going to be part 4 out of 7, and in part 4 out of 7 we're going to be taking a look at the S component. This and more in this trading video. Hi traders, thank you for joining the Master the Markets team in our 7-step video series today and supporting us in our mission to spread the truth of trading and help you achieve consistent trading performance. It is Thirunapan here, founder of Master the Markets Illiterates Conference and the Traders Open Day. So traders, here we are. So let me bring you onto the charts over here, on our 9 charts over here on TradingView. Today, I'm going to be talking about the S component as I talked about. Now, what is the S component? Now, before this S component in strategy construction, we took a look at basically 3 other steps before this, right? For those of you who have not been following us, please, I highly recommend you guys to go to our Master Markets 2010 channel and go on the streams and follow the 7 steps for strategy construction, okay? You can see everything that we took a look at over here. Part 1, we took a look at the high level picture, and then we went to CO concept, very important, and then we looked at the E component. Now, today, what we're going to be taking a look at, traders, is going to be taking a look at the S component. Now, what is the S component? The S component, traders, is basically the stop loss section. The stop loss section or in your strategy rules script sheet. Okay, that's what it's about. Now, before you start to write the rules for the stop loss component, you have to first think about the CO. Now, what is the CO? I've already talked to you about that before, right? In the previous part, in the previous video, which is concept and objective. Concept and objective of your strategy. Now, based on the concept and objective of the strategy, then you choose and pick the stop losses that will fit along with that and align with your strategy. Okay, right. I'll talk more about that later on as well as I introduce to you the different types of subsections and everything that you need to take a look at. Now, that brings me nicely to the next slide, which is in the stop loss component of the strategy. There are 2 subsections, traders. There are 2 subsections. Now, let me bring up the 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 crib sheet template. So the crib sheet template looks something like this, right? So over here, as you see, it's rules for stop loss is the component, the S component. And over here, traders, we're taking a look at 2 subsections. One is called the initial stop loss section. Where will your initial stop loss be? The next thing is your trailing stop loss. How are you going to trail your stop loss? Just hang on a minute there. I will just go into much more deeper as well. And this all what I'm going to be sharing with you stems from our 15 years of research and our 38 years of cumulative trading experience in the team. Okay? Right. So now in terms of initial stop loss, okay, in terms of initial stop loss. Now, where should we be placing our initial stop loss? Is the usual question that we will get, okay, before we even go to the trailing stop loss. So if I go back to the charts again, if you're enjoying this video, go ahead and smash that like icon. If you haven't joined our channel yet, click on the subscribe button and hit the bell icon so that you get notifications immediately when we post up quality content like this, and especially to get our live trading updates sent directly to your phone. Right? So if I take out any instrument, let's say even if I take out the British pound or something like that, the question is wherever I enter, okay, let's say I entered over here where our dot is on the smart money framework. Now, the question is, where will I place my stop loss? Where will I place my stop loss? Will it be around here? Right? Will it be around here, or will it be here, or will it be even further away, or will it be even more tighter along the low of this bar? The question is that, and some people might say, okay, before I tell you anything, how we look at it, Now you guys just type in and let me know, I mean, where would you place your stop loss? Based on what is what I want to find out from you guys. Based on what ideology would you place your stop loss? Your initial stop loss, right? Before I go on to the trailing stop loss. Where would you place your initial stop loss? Okay, I get some messages and I'm getting some emails as well about the different places where you would put your initial stop loss, because we're getting people from looking at from different platforms over here as we're doing this. Now let's go back to here again, and let's see, right? So in terms of the two subsections, initial stop loss is where we are at. Now where will you place it now, and how would you think about this? First of all, before you think about placing it anywhere, now let's take a look at the three types of stop loss. Okay, the three types of stop loss that we'll be taking a look at. The first type of stop loss traders over here, let me go back to the charts again. The three types of stop loss, let's see over here. Let's see, even if I take a Dow Jones as well, three types of stop loss, what we can be taking a look at is, one is the T, right? Which is what I spoke about over here. What is the T? What is the TMT? What does the TMT stand for? What are the different types of stop losses? Now, the T actually stands for the usual one, which everybody knows, which is technical stop loss. Technical levels. So the stop loss is based on technical levels. Okay. Now, in terms of technical levels, you can also split that into two types. One is called confluence type of stop losses, which is usually like where the stop losses are usually confluence, are usually aggregated upon by the crowd. Usually that will be moving averages, Fibonacci levels, horizontal support and resistance lines. All that will come under your technical stop losses. The next type of technical stop losses under the section of technical is volatility based stops. Okay, volatility based stops. Volatility based stops is based, let's say, on the individual raw units of that particular instrument. So for example, Dow Jones would be points, either 500 points, 200 points from the close where you enter, or it can also be based on ATR levels as well, volatility based, right? Average true range. Yeah. So those are the two types, what the technical types of stop losses will come under, and you can pick and choose from there. Now, the other type of stop loss will be under technical as well. So three subsections under technical. So we got the confluence. Under confluence, you got moving average, Fibonacci, horizontal support lines, and so on and so forth. Or you got the volatility based on the points or the ATR. And the last one is based on pattern-based stop loss, initial stop loss. Yeah. So basically, for example, if I do get, right, let me just move that a little bit over here. Let's see if I can move that a little bit down. So if, for example, if I'm entering on here, pattern-based stop loss means I would get out when the next bar goes against me in this format. So I'm getting a pattern, right? Once I get the pattern, I would exit on close or place it on the high of that bar or whatsoever it may be. So pattern-based stop loss, okay? Price action based or trend line based, whatever it is, right? So it's pattern-based. Mainly usually is price action based, okay? So the question for you traders, when you take a look in terms of, let me just bring that up, in terms of initial stop loss, where you got all this to choose from. So technical, in terms of confluence, or you got volatility, or you got pattern-based stop losses, you got to ask yourself, which one are you going to choose, right? The other type of stop loss, right? Because I said TMT, remember? So the M is based on money stop. Money stop. Okay, what does that mean? Money stop means basically from wherever you enter, let me just see if I can bring up, let's say, maybe even Ethereum, right? So from wherever I enter, let's say if I go on the daily over here, so wherever I enter on, let's say I entered on here, right? Let's say I entered on here, and wherever I enter it on, money-based stop means for the initial stop is I will place it, let's say, just $1,000 away, and that also based on my position size or my risk management or percentage risk management. I would just place it $1,000 away. Okay, that's called money stop, simply based on money stop, right? Now the last T, All right, the first one is technical, money. The last T is time-based stop. So let's say I would place my stop loss or exit live, my initial stop loss, 2 days before this. Okay, let's say if I enter this 2 days before wherever the low was of the bar, I will place it. So I'm using a combination now, right? Or in 2 days' time, I will place my stop loss for the lowest point. So whatever that may be, okay? So that's called time-based stop. Okay, right. So based on this, so you can place all your initial stop loss based on technical, money, or time. Okay, the way we do it, traders, the way we do it is based on a bit of a combination. Now, the initial stop loss usually we use only technical based stop. For those of you who are unsure of any of the terminology or the concepts in this video, watch our free Trader Starter Pack 5-day video course as shown in Empire Cinema. It is educational, entertaining, and covers basics and advanced content with cross-transferable principles for trading and investments. It pertains to both beginners and intermediate traders, all dedicated towards helping you achieve consistent performance. Go ahead and register for it on the link below. Now, how are we using the technical based stop? Based on quite a bit of um, statistical base. So let me just go on to a daily time frame over here. And because we got the smart money framework here, the smart money indicator where we have quantified the tops and bottoms over here, it's not the holy grail, it's a framework, right, that we can then build solid, sustainable, scalable, reproducible strategies from. From this framework, traders, I can get statistics. So for example, when I do, let's say, MAE, which will be very helpful for my initial stop loss, I can then put less than or equal to comparison sign. Immediately I can see that from wherever the dot is happening, wherever the bottom is happening or the top is happening, from this table, let me just hide the volume for a bit. Once I look at this table, I can see that if I place my stop loss 200 pips away, right, from the close of the dot bar, right, if I'm going short, then 200 pips away to the top, then I won't get stopped out 99% of the time. Now, that will be very useful information, is it not? Again, all this is backed up by research, right? 15 years of research and 38 years of cumulative trading experience, traders, yeah? Now, for example, if I want to go long, again, the same thing, right? 200 pips away, if I keep it there, is 99% of the time I won't get stopped out. Now, some of you might say, oh, this is a bit too far. What if my target is a bit smaller? You know, my expected reward to risk ratio and all of that, does it really tally up? And that's where you need to do your numbers, the law of numbers to work out. And I'll be talking more about this in the part 7, where we put it all together in terms of the strategy construction, okay? Right, so at least this will give you some statistical backing, okay, traders, yeah, in terms of the stop loss to use, the technical, okay, in terms of statistical base. Now, coming back to this then, so on top of all of this, even though we take a look at all of this, that's on the initial. You said, Tibu, that's all great. You taught me about technical, money, and time-based stop. But how about my trailing stop loss, which is the second subsection, right? Which is second subsection. Now, how about that? Now, for that, again, you can use this, right? Technical, money, or time as well. So you can reflect on this and write your rules down, okay? Now, let's go back to here again and back to our PowerPoint. Now, the last thing is then, some of you might be saying, Tiru, I know it's a lot of information, but how do I combine it? How do I write my rules? I'm a bit confused. So first of all, look through the live stream first on all the first parts of this, right? Where we go through all the 7 steps for strategy construction, right? Look at all the first few parts and then go through it, and then you will get more clarity. The other thing also, traders, as I mentioned before, is in your the rules, use stats validated parameters, just like I mentioned for the E component for entry rules, which I just showed you for the MAE and so on and so forth. The other thing is whether some of you might be asking, and some of you are already asking me, which type of stop loss is the best? Is it the technical, the money, or the time? You guys type in the chat box. What do you think is the best? Is it technical? Is it money? or is it time stop? What do you think is the best? Right, I'm just getting some answers over here. Let me just take a quick look on the emails on my phone as well. Yes, some of you are already saying it. Yes, some of you are saying it's time. Some of you are saying it's technical. Some of you are saying, of course, it should be technical. You see, traders, if you really want to just rank it out of strength, some people say time is the most strongest. Okay, some articles that I've read. The second one being technical, right, and the third one being money. But you want to know which is the most strongest? The most strongest is when you use a combination of them along with stats validated parameters. Okay. And the combination, now some of you are saying, okay, but how do I combine them? You combine it when you align it with your concept and the objective of your strategy. Remember that if I go back to here in 7 steps, we took a look at the part 2 where we looked at the CO, right? And some of you who want to go and look at all these videos, follow us on Master the Markets 2010. As I said, we're going on since 2010, that's why 2010, and you can watch the streams, okay? Right, so now going back to here, coming back to here again, right? So as I said, combination. And how do you combine it? You combine a way to align it with the concept and objective of your strategy. For example, if your strategy is to capture big runners, okay, runners that run, okay, of course your stop loss got to be conservative because you got to give it room for it to move. And based on that, your trailing stop loss got to be conservative and your initial stop loss got to be conservative based on your MAE stats or your technical levels and also time as well. Give it more time to run, combination, right? In alignment with your strategy. For example, another one that we do in our live trading room, where it's just a small profit that we go for, but a very high reliability strategy because it's small profits, and then the losses that we take is quite big because we still got to give it room for it to move. Therefore, our initial stop loss is quite big, but the time that we give it is just only 1 day to get that because we got the stats for that as well, based on the smart money framework. Okay, which is also we can get from here. When you go back to here again, I can get it from here in terms of time to over here. You see, time to, I can get that. Now, some of you are wondering what all these stats about is a bit too much for me. Don't worry, don't despair. On our Master the Markets 2010 channel, there is all the 7 parts here to achieve consistent trading performance. We go through much more in detail over here, right? All to help you achieve consistency. Right, so that's that one there, traders. So I've talked to you about all of that over here on the combination and alignment to the CO. So finally, to summarize the types of stop loss that you would choose for your initial stop loss and your trailing stop loss would be dependent on your target levels and time frame that you choose to hold on to the trade. The bigger the time frame or combination of time frames, then of course your stop loss is going to change, and also your management on which time frame going to change as well. Remember, traders, that we've been doing this for a very long time, for 15 years full time, 38 years of cumulative trading experience. That's why we know what we are talking about, and we know how to combine this, and we're strategy developers. Right, so most of this information you can get it on traderstarterpack.com. Okay, 5-day video course, get it absolutely for free, and you can learn some really strong principles that you can cross transfer to any strategy that you construct. Okay, this is how we are able to achieve all the results that we're able to achieve on our live trading room performance that we publish in real time. I think I've shown you guys this as well before, 2022, 2023 as well. So if you take a look over here, 2022, we finished with 73.34%, which you can see over here, right? On the 3 strategies, these are just not numbers, just punched into an Excel spreadsheet. Every single trade is taken in real time. Profits, losses, every single thing is shown to you without hiding. And we publish this in real time as well on a WhatsApp group that we do have on an educational perspective. However, you see, last year was a ride in the park, right? It was really nice. And then the losses came in November. So really good. We are far high up on the equity curve before we saw a drawdown. That's based on the combination and the diversification which we have done our strategy portfolio on. However, this year, traders, if you take a look, right, on the combination that we did, we had 5 months of drawdown. And then some people were losing faith and all that, but we still had conviction because we know why the strategies must continue to work, because on what I'm teaching you so far on strategy construction. And look at June, right? 7.31 and 12.27, monstrous months, which then brought the whole equity curve up to 8.03%. Okay, these are all just examples to tell people that it is possible. These are all just 3 strategies that we do, end of day strategies, which suits most people on 9 to 5 or business owners. Okay, doesn't affect your daytime job. And of course, if you don't do intraday, we also do that as well, because we are strategy developers. You can see every single trade is locked in, every single win, loss. We don't hide anything because of the conviction that we have, which comes down to this in terms of our strategy construction and stats validator parameters that we do and align them to our concept and objective of the strategy. So it's a lot of things, and we follow the 3-step philosophy of research first, and then we trade, and whatever works, we share it through this educational platform. Okay, traders. Right, on that's pretty much that on this one, on the S component. Quite a lot for you guys to think about. Go back onto this crib sheet template here and write it down. Initial stop loss rules and trailing stop loss rules, what you want to have. Okay. On the next part, I'm going to be going through the T component of the 5 components of the strategy components. Okay. Right. I think I'll wrap it up there. Just a quick reminder for those of you who want to go through these videos in much more detail. Go through our Master the Markets 2010 channel, follow us there. Really great content which we're going to show you, and you can go through all the different parts on strategy construction, and be developing more of this and releasing more of this as we go along, all in the notion to help you achieve a consistent performance. Okay? Right, traders, I guess that's pretty much it. And as we always say, till the next time, stay disciplined, follow your trading plan, and keep trading like a master. If you want to get notified every time we put a video up, especially on our live trading update videos, hit the subscribe button and turn on the bell notifications icon. This will get the YouTube algos to kick in and for you to join us in our mission to spread the truth of trading further, so that traders like you can benefit from our videos to trade like a master, achieve consistent performance, and change lives.